Good afternoon, good morning, good evening, everyone. It is 8:26 a.m. Eastern Standard Time on this first day of March 2021. Let's do a little rundown of our cryptocurrency markets. This is Bitcoin's chart. The 3-week chart's on the top left. You can see we got a pretty doji-ish looking candle here on the 3-week. So this 3-week candle will close on the 7th of this month with the new weekly candlestick starting on the 8th. That's going to be a pretty telling level for us to look at because we've got some kind of extremes here. So Bitcoin is the 3-week RSI is pretty much on top of the 90 range, but we're kind of sloping down, while the composite index is also at a historical high, and we see the percent B dipping down. So it's currently pointing to some weakness up ahead, just an FYI on the 3-week chart. Then we look at the weekly chart. We see some pretty normal retracing going on here, and we're coming down to so we're in a bull market. And when you enter into a bull market, the RSI levels change. They no longer stay in the, 30 and 78, we don't use those anymore. Unless it's a strictly range-bound market, we don't use those anymore. In a bull market, the overbought conditions are at 80 and 90, while the oversold conditions are at 55, 55 and 65. And we're right up against that 65 where we see the RSI looking like it had a little bit of a bounce at the end of the week last week. As we're transitioning to the new one, we see that the composite index is at somewhat of a support level. It has found support at this range back in September of last year, July of last year. And it was used as a resistance level in December of 2019, September of 2019, and again back in November of 2018. So we're in from the composite index, we're in a level that is a very strong historical support and resistance level on the weekly chart. And then the percent B shows us still above the 0.8 range. If we put the Bollinger Bands on here, we're just going to see some continued pressure up against the upper band, which, by the way, I like looking at the percent B indicator versus oscillator versus the percent versus the Bollinger Band indicator itself. The upper bands and lower bands of the Bollinger Bands, it's a volatility indicator. And just because something is piercing one of the either the upper or lower bands does not mean that things reverse. In fact, when you come out of a squeeze, a Bollinger squeeze, when things start to close above or below the bands, that's often the indicator that you need to consider, going long or short and doing it for the long term. It's a sign of strength when that occurs. When you have the close above the band or below the band, that's a sign of strength for the future trend. So just keep that in mind. And we are coming up against the weekly Tenkan Sen, so keep that in mind as well. The thing is that we have not tested the weekly Kijun Sen. I'm going to keep repeating this. We haven't tested the weekly Kijun Sen since we really broke out of it. We've just found continued support against the Tenkan Sen. We have not really tested that weekly Kijun Sen at all. So just keep that in mind. We've had, last week was pretty bearish. This is actually hard to wrap my head around because I really didn't even notice the change. So there was from the open to the close, it was a 21.32% loss, which is one of the worst. It's actually the worst week since the COVID crash in this month of last year. And it's one of the biggest weekly drops since, excluding the COVID crash, last week's sell-off and drop was the second worst since the November 2018 capitulation move. But the thing is we're not seeing a whole hell of a lot of follow-through selling Over the weekend we did see some selling pressure, but now we're up 6.53%. Um, the that's a good thing, and we're seeing a lot of the other cryptocurrencies respond in kind. Where are we not seeing that performance reflected? Cardano. Now Cardano's had a pretty amazing run up. I've been talking about a retracement in Cardano. I think it still comes down to the 80 to 90 zone. It's trading at a huge discount to Bitcoin now. There's a 10% discount in the ADA BTC pair, which I am getting tempted to jump in and convert some of my Bitcoin back into Cardano. But again, on the weekly chart, I want to see if it'll come down to that 1860 Satoshi range before I dive in, or even at the 2150 range on the daily chart. I mean, that's where I might think I'll dip a little bit more and go long on some Cardano with Bitcoin versus the dollar. But yeah, this is, I mean, if you want to get Bitcoin at a discount and you are holding Bitcoin and dollars, you're going to get a better bang for your buck, so to speak, with converting Bitcoin into Cardano. I still think there's a pretty good retracement here with Cardano against Bitcoin. You had the mainnet launch on Cardano occurs today after, because Mary upgrade was finished 2 weeks ago, a week ago, and we should see some big changes here coming forward. But there's a huge cryptocurrency fund out of Dubai that has started to exit Ethereum and Bitcoin, exit out of their positions and dive into Cardano. You're seeing a lot of other Ethereum projects dive into Cardano. So this is just a technical retracement, which is warranted. And I would really love to get into Cardano. I have a hard time re-entering Cardano at these levels, mainly because I've been a buyer of Cardano since 2017. And a lot of my I scooped up a bunch when it was at 4 cents, and between then and 30 to 40 cents. I have a hard time wanting to get back in when it's up here. So I'll get in when it gets closer to $1. Otherwise, I'll just hang on to what I've got. But that's what I see happening here. So Bitcoin, I mean, this is, I don't know how likely it is we continue higher here. It is certainly likely, but I still think we are due for some lower prices. I really just want it to come down to that 34, 35K value area to get in long again. And I would love to see it really put a rout in the altcoin market to get back into a discount with some of those. Bitcoin on the Ichimoku system, if the lagging span drops below the 36K level, I mean, it's going to be a pretty easy trip to the south. The lagging span on the daily chart, pay attention to this, because the lagging span's kind of the hidden triggering mechanism of the Ichimoku system. We could certainly see things trade higher or just sideways for the next, let's see, 1, 2, 3, 4. Sorry, what was that? 1, 2, 3, 4, 5, 6 days. And then if the lagging span, which also means price, if it's trading at like 43K by, how many days did I say that was? 1, 2, 3, 4, 5, 6 days. So on the 7th, on Saturday, if it's trading at 43K, but this is actually this makes total sense because there are big moves that happen over the weekend. It makes perfect sense that we would see the lagging span dip below 43K like Friday evening, Saturday morning, and that would trigger a big sell-off. That is a very likely scenario. Additionally, though, I mean, one of the things that we got to pay attention to, because we may be seeing new trends here, and I don't want to go too long with this, is that we're getting a lot more institutional participation, and the amount of volume that comes into play is going to affect the average volatility. So it's very likely that these 50 to 40% retracements will be a thing of the past. Like we may have to temporarily deal with 20 and 30% retracements, and then eventually we'll see 10 to 20% retracements as the norm, with 20% being a rarity with all the new entrants into the market. So we'll have to just watch that and be very careful and cognizant of it. But otherwise, that does it for me for today. We'll find some more trading opportunities starting tomorrow. I'll look at that tomorrow morning with y'all. Y'all have a good rest of your trade day. Take care of yourselves, and look forward to speaking with you tomorrow. From all of us at Exchange Rates UK TV, please don't forget to like and subscribe. Bye-bye.